Hear myself all right. Hope you can see my screen. Today is the 11th of January. Welcome to the trading room. Good morning, good evening, and good afternoon, wherever you are. My name is Tim Stout. I will be guiding you through the price action today. Yesterday was quite a interesting day. We had a big up, big down on Monday. So big up, big down confusion that led to a mostly sideways day yesterday, but with a bull trend and a bear trend in there, or a bull swing and a bear swing, I should say. News today is not really there. Let me take this off. There's not really news today. Thursday is CPI pre-market. I think traders are waiting for the CPI to be released. That led to some very strong moves in the past few releases. So we have the CPI release here on this day, where you had a big move up pre-market and a subsequent move up during RTH. And here's the other CPI release, the big down day that was there on September. So I think we're deciding what to do from this range as soon as that news gets released on Thursday. I am not expecting, I'm expecting trading range behavior until then. That will decide if we break up to the upside or that will break down to the downside. We had a little bit of a range here, end of December, beginning of January. End of December tends to be a little quiet. Beginning of January, the first week, can have really, really large swing days. So on the 6th, we had a big day, and we're now sort of at the top of that range, trying to see if we are going to break out to the upside, sort of that 4,000 area, or that will break down to the downside to back to 3,600. So yesterday, we had that big up, big down day on Monday. So big swing up, close of the gap. Measured move up, double top there, coming down, measured move down from the 13 low to the 22 high. That sort of got us into this area and a little bit more at the close to close the gap to the Friday. So we had big up, big down, big confusion. To me means that we mostly get sideways. If you look at Monday, this range here coming down, so we had swing, pullback, swing, pullback, swing, pullback, and then we had a little bit of a flag here. I think that is the final flag that would have to get tested again. So what happened yesterday at the open, bulls wanted to test that area, close the gap there to the final flag. You can see that we had that little 63 scale line target there. The bottom of that flag was tested there on bar 10. So final flag, mostly sideways. The open was, I think, a little tricky. So big bull bar, possibly not a good buy because we started from a gap down. Like the close here is basically a gap down. So gap down, big bull bar, not a buy yet. 2 is then a pullback. I would buy above 2 for continuation up. Didn't happen. Actually, bar 3 gave the bears a 1-hour target. Right? So if you measure the bears got their 1-hour target on bar 3, then 4 actually made a double bottom with 1, and I think that's where the bulls gave up. So in the close of 4, or the fact that 4 went so far below 3, bulls gave up there. Then 5 went below 4, so now we have a break of that double bottom. Bears are expecting a measured move down. So what you would expect here is that price would break below bar 1 and that would break down to 85.25. That is what I did as well. I sold 1 tick below bar 1 and I got immediately trapped all the way because bar 5 ripped up, went 15 points or something up. So I sold more on the close of that bar 5, and I think a lot of bears did that. And what happened was that if you went short 1 tick below bar 1, you sold more on the close of 5, you exactly got out. So that's what I did. I exactly got out break even. and I was no longer bearish from the opening range. Above 7, so bears now have bears would see this as a two-legged pullback, or bulls see this as a two-legged pullback. Bears see this as like hopefully the start of a swing. So above 7, if you see this as a tiny little bear leg, that tiny little bear leg now has a tiny little bear stop above 7. Okay? So this is, if you see this as a 10-second chart, you would see a big trend down, pullback, and a big trend down again. So above 7, that is where that bear stop is. That is where I would get in. So I see that bear stop. I know that bears are going to give up above 7. So you buy one tick above 7. You look for a measured move from the 7 low to the 7 high. That gets you there immediately. You want a little bit more. So what bulls were doing is they bought the close of 7 as well, putting the stop there below 7, and that got them exactly 2 times risk reward. Right. So that 2 times risk reward was 1 tick. Was exactly there at the high of 9. Can you sell below 10 knowing that this is now a trading range? I found it difficult to sell below 10. I didn't, just because the strong move up, the close above all of the prior bars, bulls temporarily in control. So I didn't sell below 10. I thought maybe an extra leg up, maybe somewhere in this region. So I didn't sell. But I exited my my longs here at the high of 9. As soon as 9 closed, I exited during 10 at the high of 9. I now have the same scenario as the bears had. So you have this little move. So now you basically have a little bull move where price moves up on 7, goes up on 8, comes down, goes up on 9, and higher on 10. So that means that below 9 or below 8 is basically a higher low. So bulls have a higher low here. Okay? So if you didn't get short below 10, I fully understand. I didn't. You can get short below 11, but there's quite a gap, quite a tail, sorry. So it's risky to go below 11, but I would go short below 11 once it hits below 9. So that's what I did. I went 1 tick below 9. 12 closed 1 tick below the low of 9. So to me, that is at that moment, at the close of 12, possibly a successful breakout. Right? So I'll wait to see what 13 is doing to make a decision if I want to exit or that I want to stay in the trade. At that moment, I draw a measured move line to the low of 9 and even to the low of 8. And you can see it hit exactly that low, that measured move there. So I got out on the close of 16 when I saw price moving up. Okay, so you got a little short there from 1750 to 350. So you got about 14 points at that point. Plus you got like the move to here. So you got about 20 points there, break even on the first trade and profitable on the second trade, profitable on the third trade. What happened here basically was a little wedge. So 10, 11 down, 12, 13 down, 14 down, right? 14 is the second leg trap. You get like an up move, and then you get a down move. 16 reverses up immediately. So above 15 is where bears will get out. So again, you can buy above 16, believing that you're buying a field breakout of the trading range, you're buying a wedge pullback. So you can buy 16, above 16, but with the tail, it is a second entry, although this didn't go above 14. So you can buy it above 16. You can also buy it above 16 as soon as it goes above 15, right? And then you're looking for the measured move from the low of 16 to where the bear stop is above 15, and then upwards to, let me actually put this right, to 22.25. Okay? So as soon as you see, so you can buy above 16 taking risk. You can buy above 17 having much more information, knowing that we're probably going to go up for a measured move, but lower reward, or you can buy during 17 as soon as it goes above 15. Right? So then the move up to 22.25 that got hit there. if you bought above the bear bar thinking that we're going to get continuation, you got a failure on the first attempt. You got a second attempt to get out, break even, and with profit on your second entries. And then because these gaps were open, it's a trading range day. On trading range days, gaps close. Mostly all, but at least all except the first one. Right? So the first one can be a runaway gap, but then so this gap here above 16 to the low of 18, that might stay open, but this gap will close. So this one will close. If we would get another one, it would close. And same here on the way down, right? So you had a gap to the low of 11, you had a gap to the low of 12. So those gaps closed here on that way up. So you had gaps to the downside. You have a second leg trap. You can sell below 23. You can sell the close of 24, all to see that gap close ultimately on 31. Inside bar 26 in a trading range lag. If you see an inside bar, the end of the move is near. It's a little final flag. So as soon as you see something like this inside bar on an aggressive lag down, in the direction of that lag, so this is a bear inside bar, that is that probably the end of the lag is coming soon. So if I would be in the short and I see that inside bear bar, I would get out of my shorts. It's not a reason to go long, but it's a reason to exit shorts partially or completely. So 28 ran up, so you had a little up, down, up, down, up, down. So that's a little wedge in a mini wedge formation. So you could sell below 30, and you could sell below 29 for that gap close. Gap close, we immediately ran up. This spike had control over this whole pullback. Right? In a trading range, as soon as you get a breakout, often it takes at least 10 bars before you get the right trade to take for the continuation of that breakout. So move up from 16 to 19 takes about 10 bars, so 28, 29 before you get like a good run up. If you see this as a two leg bear leg, then above 31 is currently where the stop is. 32 breaks out of 31 higher low, so that's an excellent place to buy for continuation. And from here, this was a small pullback bull trend. Means that you can buy above bear bars, scale in lower, and continue. You can also buy below the bull legs or the bear legs because you're anticipating more trend continuation. Right? The bears never really get a lot of profit. So selling 39 didn't give them one-time risk. Selling 45 gave them one-time risk, just about, right? And you see that as soon as they got their target, bears are buying, bulls are buying. We reverse up. Little channel here to the high of the day, double top. So you'd expect some sort of a pullback here. It's also a mini wedge running to the top. So you have 54, 55, one leg, 56, 57, one leg, and maybe 58, the third leg, and then second entry on 62 for a wedge stop short. Right? And that got you, if you sell below it, that got you one-time risk. If you just sell the close and put it on top there, got you 2 times risk. No, not completely. It got you 2 times risk if you sold 59. What happens here, so you got higher lows, higher lows, higher lows in that whole bull trend. So you got higher low here, then we run up to 38, we got a higher low 37, we got a run to 44, 45, so we have a higher low 38. You get a new run up from here, you get a new run up, so you raise your stop every time, and then you see that in this pullback, it's the first time that we fall below a higher low, right? So that's falling below a swing higher low. Many trends will have their last leg up as soon as they fall below that swing low. So if you would raise your stops, you would actually, and you would follow this whole swing, you would actually get stopped out if you would just raise your stop and never do anything else. What happens then, often it goes up and it sets a measured move of that trading range. But from here on, because we fell below a higher low, by definition, we're no longer in a bull trend, because a bull trend makes higher highs and higher lows. We are now in a trading range. So we're at the bottom of the trading range probably, but by definition, the bull trend is now over. So you might expect, if the day would have more time, that we would break out of this and go to 49.50. Now 49.50 also here are targets from that final flag. So if you would have bought that and held, then we sort of got there on 79. So swing bulls that trade over multiple days could have bought this, could have bought lower, and then you exit your whole position as soon as you got back to that final flag target. So it was a tricky open because we were opening in a triangle. That doesn't happen a lot of times. It's easy to lose a lot of money. If you buy this, you exit here, and you think, oh, I missed it, and you sell here, and it goes back up. You buy here, and you get stopped out here. So if you don't pay attention, openings like this can cost you a lot of money. It is vital to see what everybody is doing, where the stops are, where the targets are, and seeing if bulls and bears can actually get to a 1-hour target, get to a 2-hour target. That's how I assess. That's how I assess the opening price action. So quite scary in this regard, because you have that double bottom and then 5 didn't break below the range and went down, but instead it went up. So that was the tricky part there of the open. Right? You would have wanted that it just continued down for a measured move. So in that case, you repair the damage, you keep your stop there, and you sell more, you get out break even because your bear premise is wrong, and then you see either you do nothing, but you genuinely want to change your mind and become a bear or a bull because your bear premise was wrong. Right? But if anything, like just get out, break even, and then assess the situation again. So where are we on the rest of the chart? So starting with monthly, I still have my chart looking the same way. So we had our measured move breakout of the channel. I'm still expecting, although it can take a long time on the monthly chart, I'm still expecting us to trade back to the 3,000 area. But we're bouncing from the trend channel line. We might get a one-time risk reward based on October. That is what the bulls are trying to get to. So that 4,300 area, we might get there. We might even get all the way back up before we start to come down again. But this is a variant of a major trend reversal in the making. Strong breakout of the trend line, climactic price action, break of the trend line, lower high major trend reversal, or even a higher high major trend reversal. But I'm thinking that we are in the process of some major trend reversal. On the weekly chart, we had our humongous leg up from the pandemic crash. Pandemic crash was actually a variant of what I mentioned. You have the first time that it breaks a major higher low in a major bull trend. Right? So you have the break. So the stop was here, the swing stop, all of this. Then you crash and you break that low. So from now on, by definition, it's no longer a bull trend. On the weekly chart, you are now in a trading range. So what happens is that range gets taken out, you get a measured move up, and then as from here, this whole area is basically a trading range. This would be a bull leg in the trading range. This is going to be a bear leg in the trading range. And it reminds us actually a little bit of what happened on Monday, right? So what happened on Monday, you see that that big leg up, you see a big leg down now in the forming. What could happen is that we just crash down or that we go sideways. But this is sort of a variant of what we see on the weekly chart, right? So you got that leg up, and it's now becoming a leg down. It's also an expanding triangle. It's not really a channel. So if you try to measure, let me take a short break here. I should not throw water over my desk. That is not a good idea. What was I talking about? Oh yeah, expanding triangle, right? So if you try to draw the same line over the tops as over the bottoms, you don't really get a good channel. Like it doesn't really fit, so it's sort of an expanding triangle. Every expanding triangle is a major trend reversal. We broke the 2021 low in this whole bear leg. We reached the same type of lag as the size of the pandemic pullback. In a bull trend, every pullback starts getting bigger. So you expect that if you see the pandemic crash as a pullback, that the next pullback will be the same size or bigger. So I measure from the top, and so I measure the size of this pullback, and then I measure from the all-time high, and I get to that target, which happens to co-influence with the 2021 low. So we hit that, and that's where we started to reverse up. Not a miracle, because traders on the yearly chart did not have a chance to buy the low for a couple of years. So when it hits below 2021 low, there were buyers in the market there, and we're now basically in sort of a sideways trading range. I'm still thinking that we can go lower. So this whole trading range leg up has a 50% pullback point a little bit below the 2022 low. There's also a gap there from 2020, and I even have a 2600 target. So, but what we're now seeing on the monthly charts that we're actually wanting to go up a little bit, right? On the daily, so this is Globex daily, we are looking at that trading range, right? So we went a little sideways. We are now breaking above it, but we had a first failure. So if we go above 3973, 4000 is sort of our target. There's a gap there, 3997. That 3997 target also is in agreement with the 60-minute chart. So 60-minute chart, a lot of sideways here. If I just take it very roughly from here to here upward, down there, and I project it a little bit up, that 3997 is the target on the hourly chart as well. We broke above it. We had a little bit of a failure here on the Monday, I guess, and now we're trying to move back up again. So 3997, 4000, that is not an unknown number to all of us. That could be a bull target. But again, I'm expecting that Thursday is going to be the dominant day, pre-market, CPI numbers. So that means that maybe we get a little bit silent price action today. On the Globex, we moved sideways, then we moved down, then we moved up. So what you're expecting is that this stop gets taken out, and then we're going to get a measured move up 3958. We got there one tick, so maybe I'm not measuring exactly. 3450 to 4625 is 3958. Yeah, so we could take at least the Globex high out to get to that 3958 target. There's a little gap there, 396225. We might fill that gap. There's a close there, 3970. We might get to that close, and then there's the 4000 number. I'm looking to see down if it left any gaps. Open. So this bull bar left a gap open that was closed on the next bar. There's no gaps open here. There's no gap open here. There's one gap open maybe here. So the high is 42. The low is 42.25. So there's one gap open there at 3942. Right. So you see, price moves above that high of that 60-minute bar, 3942. It pulled back and it left a gap open 3942.25. So there's a gap there. Price will get pulled back to that gap. The moving average is there. We just took out that measured move target 58 pre-market open. So that is there. Then I have the continuous chart. So what are we doing? I don't mind so much what's here on the earlier hours. I mind about what's going on now. So a little bit of a channel maybe from here to here and from here to there maybe. Houston gaps open. It's in a bull trend. We just took out like a new higher low. So looking to see some movement to the upside. Right? But we got that measured move on the 60-minute chart. So 3942 is actually a target as well. and that is close to yesterday's high, right? So what am I expecting? I'm expecting a move down to 3942 to close the gap on the 60-minute chart, to close the gap on the daily chart, and I might expect a move up to 3997. Right? So those are sort of my expectations. Every day in the last couple of days closed the gap on the daily chart. So you had a move higher, closed the gap on the daily chart. You had an open higher, closed the gap to the daily chart. You had a move lower, it closed the gap. You had a move higher, it closed the gap. So every day has closed the gaps on the daily chart. So if we now open 3959, I'm expecting it to close this gap. Is it going to close at the open? Doesn't have to. It can run up to 4,000. It can run up to 6,000 and then come back. But high chances that somewhere in the first hour, somewhere in the second hour, we're going to test the 3942, which is then also closing the gap for today. So that's sort of how I look at the market. Like, I know what the market has been doing the last 10 days. I know what's going on the higher time frames. I know what's probable, and then I'll look briefly at the Globex chart to just see where the highs are and what it's doing in the last 20, 30 bars or so, where the levels are, and then I'm waiting for the open. And of course, I drink the coffee and meditate a little bit to get into flow, but you don't get to see all of that now. So just waiting for the open. That gives me some time to see if there's any questions. I don't think that there are. That's good. Yeah, I didn't freeze. I just threw a glass of water over my desk. The good old risk manager is almost destroying his own infrastructure. All right, market is open for us. Let's see what we can expect. If you're very early and you're one of those that wants to trade in the open of the day or directly at the open, it's better to look at the continuous chart, at the Globex chart, because you're following the price action that came from this. We're right at that channel line that I drew. So if I took here the channel line and I took here the channel line, we're right at there. So what can happen in a bull channel when we're entering the top of the bull channel? Well, two things. Basically, we can go back and test the other side of the channel, or we can break out to a measured move on top of the channel. So if I take the width of the channel that we have there, 3973 is the measured move, top of the measured move based on the channel width. So that can go to 3973, or we can now set a bear leg and go to about the other side of the channel, 3948. And remember, I have the 3942 in mind. So right now, based on the Globex chart, I would just only look at a measured move above this target that we just met. So we had that little range there, measured move target. So we met that and we're reversing down. But that's, if you're a Globex chart trader, that's what you do. And that's how you look at that price action. I'm just looking here. So where are we? So draw a line to see where we are. So we're sort of in this range. That means that everybody who scaled in on Monday, buying here, buying here, buying here, buying here, and held, I think the only ones that are still holding are these guys. So if on the way down you bought 35 and you scaled in lower, you're still waiting to get a profit on your first entry, or get break even on your first entry with a profit on your later entries. All of the guys that bought here, 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 here are now out, right? Because that 40 close was now taken out. Okay, so gap up, bear bar. That's not a sell on itself yet, because you have to see this gap as a big bull bar, right? So if you have a big bull bar and then a bear bar, do you sell below it? Well, yesterday you could, but you know, where are the cases? There's enough cases where we haven't had that, right? So you can have a gap up, big bull bar, but it's basically not a short because it's more of a pullback at this point from a long, right? You have to see this gap as a giant bull bar in between yesterday and today. The fact that I'm thinking that there is a chance that we hit the 42 and that there's now a bear bar doesn't mean anything, because we can still go up 50 points and then come down and hit the 42. So the fact that I'm thinking 42 is a target, the fact that I'm seeing a bear bar, I don't get excited about shorting just yet. I have my premises, but I'm just trading what I see, and what I want to see is a bear bar, then a bull leg, and then a bear bar that breaks that bull pullback, and then I'll go short. So this turns out to be a big bear bar. I'm not shorting it because we have a gap up, and on the bull and on the Globex chart we were in a bull trend. And basically I never make any decisions on the first bar. I hate 80 bars to get back the money that you lose on the first one. It's quite a kind of boring start to the year. We used to have a lot, we used to have some days where we had huge swings at the beginning of the year. This is my third trading day now after a 3-week holiday, so I'm quite surprised to see this sort of sideways action. I think I remember from 2021 that we had a huge bull bar on the first day of the year. So this is now basically a bear pullback from the bull gap, right? So bulls will buy above bar 1, hoping for a big move towards 3978 and 4000. So if bar 2 is a big bull bar, closes above bar 1, bulls will look to buy it. It's also a doji, so it could signal another trading range day. If a first bar of the day is an undecided bar, it often signals that the whole day might be undecided. So mark the open, which is 3941.75. No, I say that wrong. 3941.75. No, again, look at it. 3950.75. That could be a magnet for any bull leg that comes down or for any bear leg that comes up. Right? So the open of the day and the trading range day is often a magnet. You saw that yesterday. Yesterday was pretty much a trading range day. Look how many times the open got tested before the real trend began, right? 1, 2, 3, 4, 5, 6, 7, 8, 9 times it got tested in the first 2 hours. So it could be that what the bulls want is that we sort of get a leg 1, leg 2, so leg 1, leg 2, 397, 350. But they need to get above bar 1 first. It could also be that you just get a tiny little leg the size of bar 1 to 71. Okay. If you're a Globex trader, you see that we got a reversal from the trend line and that the bulls are now trying for a second time to break above that channel and then move up to 73. And so we broke above 1, which was the pullback from the bull trend. Bulls will now want to see if we get a breakout above it, or that we're going to fill. Then we go back to the RTH chart. See many discussions about, are you trading RTH or are you trading ETH chart, Globex chart versus RTH chart? Doesn't matter. Our section is the same. If you trade the Globex chart, you might get signals a little bit quicker, but you also might get more fake signals. So choose your pick. Right? So if we don't close above bar 1, then basically the bull breakout above bar 1 has failed, and the bulls will want to get their money back. So what happens if you bought 1 tick above bar 1, that's 6225. If we close below 6225, bulls want to go back to 6225 to get their money back. Right? Bears will help them because bears will want to sell higher instead of lower. So bears will help them to get above bar one to give the bulls the money back and for the bears to start shorting. And if we get more time, I'll show you more examples of that. But right now, I'm interested to see if that high of Monday can be taken out, 73. It doesn't look like it yet. We're at the measured move of that 60-minute chart, right? The move of that 60-minute chart, right? But you never know. We've seen 20-point bull bars as well in the past, so why can this not form one? 20 seconds left for bulls. So they failed on the first attempt. Bulls got their money back because we went one tick above bar one. So bears will want to short there. Bulls will want to try again to get above two. And bulls will buy one tick above two. The bulls that bought one tick above one are now out, right? So they lost the fight to close above bar one. They may have bought more here to exit, break even on their first and make a tiny little profit like a scalp or so on their second. But the swing bulls tried to buy above one. They wanted to see a huge bull bar up, or at least a bull bar that closed way above one for a good measured move up. They didn't get that. So they are exiting. And they might try again if we now break above two. The bulls have a higher low now, too low, right? The scalping bulls. So you have a bull bar here, pull back, and a bull bar there. So bears will try to short below two. Right? Why will they short below two? Well, because they want to measure move down to 49 and then to 42.75. Market's in the trading range. Yesterday was a trading range. Monday was a trading range. So trading range price action, and where are we in the trading range? Quite high. And so buyers are careful buying immediately, being overjoyed with that gap up. We also have a trend channel line overshoot. So if I draw this channel here and here, you have that trend channel line overshoot, so you might expect a measured move up based on the size of that channel. That's about 57. But what do trend channel line overshoots do? They make a measured move, they set up a trend reversal, and they come back to the other side of the channel, that channel line. Right? The channel line is moving up, of course, so it might be that we get some bull lag and then ultimately move down. But if you have a clear channel like this and you have a breakout, you're looking for a measured move. But you might not be surprised if it turns back and bounces on that trend channel line. It's trying again above two. Not there yet. They're there now. Okay, so first attempt to get above one failed. Second attempt now succeeded. So we're looking for some sort of measured move up. The size may be of bar one, so 71. Might be the size of this whole thing, 74, 75. Let's see what they can do. Other targets to use are, of course, the size of the bar, of the bull bar that the bulls bought. So that would be a 1 hour at 66.25. You see that that is where they exited. So they got one-time risk reward buying the close of bar 2. 71 is then 2 times risk reward for them buying the close of bar 2. Important to see who's making money, right? So if you buy the close of 2 as a scalper, you put your stop below 2, do you get one-time risk reward? Right? That's a minimum. So they got that. So at the moment, bears are not making money because they sold one, didn't go down. If the bulls are making money because they bought 2 and they have one-time risk reward. Now, so you're looking at that gap. Right? So now there's a gap above 2. If we go higher and come down, we're going to close the gap to that bar 2, or we're going to immediately close it, or we're not going to even close above it, and then there is no gap. But I'm always suspicious that the first gap might not close. So if you look here, well, here it closed immediately. But if you look at this gap, if this would be the first gap, then on the way up, it might not close to the first gap. That first gap might stay open, but subsequent gaps are probably going to close. That's how bears and bulls can make money in the same market. Okay, 3 close above 2, good for the bulls. Still hunting for 71 and that, but now there's a higher low below 3. So bulls came up here in the gap, went down, they went up on bar 2, they went down, they went up on bar 3. So basically there's a higher low below 3 if you're trading the 10-second chart, or if you're a scalping bull, you don't want to have the market come below 3. Bears will try to get in below there, hoping that we're going to collapse down. Gap closed to the 2 high. And gap close to the 1 high. So it might be that this is a pullback to, if you call this a range, this might be the pullback to that range, and then 71.25 is a bull target. I'd be careful. 3 was a high 1 after a spike up, but we're in the high of a trading range, and we're forming, if we go to that 71.74, we're forming a double top at Monday, right? So if you buy here, you have to be careful and have to get out as soon as you see the bears taking over. Well, you have to do that anyway, but in this context, there are some extra things to consider. Hourly chart here on the left top reached that measured move target from Globex, so that measured move here from the bear leg, and it's filling now the gaps here and here, but it left a gap behind, as I said, there on the 42, so it might come down. Also, when this hour closes in 13 minutes, it might go and close the gap to the previous hour, so 57.75. That is the low of here almost, right? It's also a little bit of a wedge on the hourly, 1, 2, 3, but I doubt it. It might just be 1, 2, and then we get a 3. On the 50-minute Globex, same. So this is weak, and suddenly it gets strong. So if this is weak and suddenly it gets strong, do you expect it to go even stronger, or do you expect it to turn down and form like a big leg 1, leg 2? We'll see. Hunting for that 35 close, I think, or are we there now? Let's see. The close was there. Also, okay, so we're there now. That's fine. I'm still thinking that we're going to get below this 25 high, so 72.50 should be one of the targets. If you do anything, you're long, right? I don't see any bearish price action. I see trading range, and I see a bull leg in a trading range. I see a bull trend, but I don't see a bear trend, or even a bear swing or a bear scalp. If we go below 4, that's a low 1, right? So do we take a low 1 in a bull leg in a trading range? That would be very optimistic, and I would only take it if it closes below 3. So if it takes out the stop, the bull stop, with conviction, then I would sell below 4. But otherwise, as it closes now, I would not sell below 4. It's a micro channel up. Bulls that buy below bars have not had a chance to buy anything yet. Only bulls that buy closes and bulls that buy above bars have had a chance to buy, right? So this is the first time that the bulls that are buying below things can get their chance. If you're long and we go below 4, you can get out if you want. If you're not long yet, I would wait until we go above 4, take out the bears that are selling 4. There are some double buying pressure here, right? There's double buying pressure because bulls are looking to buy one tick above 3 and 4, double top. Bears are looking to buy because that's where their stop is. If they sold 4, or if they sold somewhere along the way and we make a new high, that's where they'll buy back their shorts. So you have double buying pressure above 3 and 4. Excellent place to buy. If I buy above 3 and 4, I'm hoping that we get a monstrous leg up. If we don't and we close like below 2, I might immediately get back out if we go back to that price. So I wanted us to go above 1 with a big bull bar on 2. We didn't. So I bought above 1 tick above 1, 2 closed. I exited 1 tick above 1 again. What are the moving average lines? So this is the 20-minute, this is the 5-minute 20 period moving average, and this is the 60-minute 20 period moving average. So I have a transparent 60-minute chart up, so you can't see it. And because I have that, I can then put an indicator to put the 60-minute 20 period moving average on my chart. So it's a little different than TradeStation, and it's a little different than TradingView. Doesn't matter. What you want to see is where we are on the 60-minute moving average. No, take it or leave it 5 points. It's not going to make a change, right? Because it's either going to test it, it's going to pierce it, it's going to stay above it. Doesn't really matter. I'm actually trading normally without the moving averages, but since we're in L's room, I'll take L setup and put the moving averages on. They work quite nicely. You get all of the bull pumps here yesterday from the moving average, so it's nice to have them around. They do good things in price action, but no, I don't like them on my chart. I don't like anything on my chart, just bars. All right, so we go below 3. If we do that, bears might want to get in. The low 1 is getting some traction. What we want to see is if bears sell this double top, do they get a one-time risk reward on their close? So 57 for them is one-time risk, 52 for them is two-time risk, selling the 4 close, putting their stop above. So go below 3. You see that works for the bears. They want to measure move. 51.25. They got their one-time risk reward. You see that we're moving up from their one-time risk reward test of the open. What they now want is that we go down further. 51.25, 2 times risk on selling 4, and maybe a move of this whole trading range back to 46.75 in the moving average. If we close within the bar 3 low, bears will do the same. They will exit their short, buy back their short if they sold below 3. So why below 3? Because this is a 2-legged move. So it's a up on 2, down, up on 3, 2-legged move. On the 10-second chart, it would be a perfect, nice little trend. So when the trend breaks, bears take over. Right? We're now all in short. The bear stop is now above 5. So bulls see the bears will want to get out if we go above 5, and that's double buying pressure now there. But bears are currently, so the low here 59, the close of 5 was 58.25, so they until now have a successful breakout. They have a failed breakout below 2, but a successful breakout below 3. So what I'm looking at them is maybe the measured move from that to 51. See if we can get that. It's still 8 points. So if you see all of those areas where you can safely get out, break even, then it takes away a lot of stress taking partial profits or taking quick profits, because you know that both bulls and bears will give you the chance to get out, break even on your entry if you take the good entry, right? So now we want to break out below 2 and hopefully below 1 and close the whole gap. On the Globex chart, we might want to go back and test that, test the other side of the channel, because we broke above that channel. But we broke above that channel with conviction, so Globex chartists still believe that we're going to get up to measured move. Who's making money now? Buy the closes of 2 made money on 3. Sell the closes of 4 made money on 5. So bulls and bears are making money on the open. We have a doji bar 1, we have an up, we have a down, we have basically trading range price action. That confirms a little bit with our thesis that up until the CPI release on tomorrow morning, we're going to get mostly trading range price action. 50% pullback. We'll move. Let's see if we can get below 1. New low of the day. The lower we get, the more stops we trigger, right? So you had stops below 3, we triggered them. We had stops below 2, we triggered them. Some bulls will have their stop below 1. So the more stops that we trigger, the heftier the bear move can become. It looks though that bulls are buying lows. So if you bought the 2 low, you can scalp. You bought the 3 low, you can scalp. I don't think the 3 low and the 2 low are far enough to do both. So you pick one where you feel comfortable with, and then you buy the low and then scalp for a couple of points if you're a scalp. 20 seconds, and it looks like we're failing below 3. So bears now buying back their shorts. So if you sold below 2, hoping for a measured move that ripped immediately down, you got disappointed on 5, you exited during 6. If you sold below 3, you had a little bit of a breakout on 5, but 6 is going to disappoint you, so you exit your short break even, right? So who's now in the market? Bulls are not in the market, and bears. Some bears might hold on because we had 2 closes below that 3. Some bears might hold on and hope that we rip now, but I am flat now. Bulls now go above 5. They're hoping that they can now get the move and take over the market, and then go to their 73.50. Bears still own the market right now because they had 2 closes below that 3, but they haven't shown enough during bar 6, right? So it's also a high 2 or more a high 1, actually, if it formed for the bulls. Hourly chart has closed on Globex, so let's look at that. So we have those targets that we mentioned. So we have that gap close. Well, the gap closed. We have the other target for the hourly bears, the hourly bulls that bought the 39.70. That's still open, and we have that gap there, the 42. So this closed as a little bit of a bull doji bar. It's a little bit of a breakout on that range, so you could draw that and see 67.25. That's almost where we got to. Let's see then if I have the range correctly. 45.75, and the low here was 42.25. Yeah, 67.25. We just missed it. So looks like we're gonna go back a little. We're gonna go up a little more. But let's see when the bears are starting to give up, right? So if you're a bull or if you're looking to buy, you're looking for places where bears are giving up. You want to buy together with the bulls and together with the bears. So you're looking for areas that have double buying pressure. And if you're looking to sell, you're looking for areas with double selling pressure. So bull stops and bears entries are areas of double selling pressure. And you'll see that. So yesterday, if you look here, Al marked this as a buy, or Brad, like whoever did the post-market release on Brooks Trading Course. This bar takes out the stop above 15. So that is where you want to buy above. This bar takes out the stop of 8 and 9. So you want to sell below 12. Right? So every time you see that double buying pressure, double selling pressure, you'll always see that L will mark them as buys and sells. That's basically something to look at. So here you have a two-legged pullback. That's a high 2. It takes out the stop of 53, and it takes out the stop of the 51 bears almost. So very good buy there. You have a little two-legged pullback here. 69 takes out almost the stop of 67. So excellent buy there. So that's how I look at the market to see where are the bear stops and where are the bull stops. And even if that fails, 80–90% of the time you get a chance to exit, break even, or scale in more and break out, scale in more and exit, break even. Bears are not really in it anymore. Bulls are not in it anymore. So 7 is neutral. We need to drift into a bear or a bull again. 7 is a neutral inside bar. The bears have 3 closes now. 4 closes with bar 4, but 3 closes below the 3, but they're failing, right? So inside bar in a trading range is often the end of a move. So if we go below 7, we'll probably bounce. We could even just go above 7 and then immediately go up from there. I would be looking to buy, as I said, the bear stop is probably above 5. So I will be looking to buy if there is a bull bar that goes above 5. Because I don't believe that bears have put their stop above the inside bar. So that's why I have the line there. That is currently where I think the bear stop is. And that means that I'm looking for a move at least to 73.50. Provided we break above 5. Anyways, price action, all gaps are closed, except the 4 low, I think, 61.50. Well, that's now closed. Oh, no. Okay, now closed. Right? So that gap got closed. So if you're really aggressive and you have plenty of room to scale in, you just say, okay, below 2, I buy to close gap to 4. Above 4, I sell to close the gap to 4, and then I sell higher, and then counting on all of the gaps, except maybe the first gap to close. Sometimes I feel like trading the trading range like that, and then I call that a gap close festival day. I just scalp and scalp and scalp until gaps close, and then scalp and scalp and scalp until the gaps close. It's a quiet day till now. Sometimes 4 p.m. 4 p.m. That is, what is that? 10 a.m. Eastern. Gives some price action because some numbers come out or some news comes out. But 6 and 7 were like the most boring parts of the day today. So no news. Market is still waiting for CPI. And then Rose tomorrow gets the CPI price action. She always gets all the fun. All right. Now, let's see if we can hit and take out bear stops. So the open was already tested 3 times. So yesterday the open was tested 9 times. We already tested the open on 3 different bars. I'm still thinking that we're gonna hit. What is it? 70 to 50. But the bulls are trying to take over. It's a good bar for the bulls. So this is one of those cases where I wouldn't buy above 8. I would only buy above 8 when it ticks at 5. So instead of 1 tick above 8, so close to that top, I would just sacrifice a couple of ticks and then buy it at 64.25 instead of at 63.75. Well, we got that in the same move. So bulls are entering, but they got disappointed the previous time. So let's see if they can now get 73.50, measured move of that range. We want to go above the double top, of course, and we can get a measured move the whole range, 79. bears will want to sell this to get a gap close to the high of 7. So the high of 760. And bulls are forcing you to buy high in the range. Bears are forcing you to sell low in the range. Typical market behavior. So this is a perfect example of practicing patience. One of the biggest discipline traits that day traders should have is patience and knowing when to do nothing and being super aggressive when the action comes. And right now, if you're a swing trader, you're patient. You're waiting for a breakout, pullback, continuation. If you're a scale-in trader, you're buying, you're scaling in, you're breaking even. You're trying to front run that breakout, right? But you need to do that if you can scale in. If you're a swing trader or a one-lot trader, you need a breakout, a nice pullback, and then some good entry point. In this environment, I'm convinced you can only be successful if you can scale. So it looks to be, well, let's give the bar some time, but it looks to be failing to get above and break above the 5 high, right? So that's where the bears had their stop. The bulls cannot break out above it. So bulls are going to get back to their price and exit if this bar closes like this. And then we'll wait further for the breakout. Bears want to see that this is the start of their second leg, so they want to see leg 1, leg 2, leg 1 pullback, leg 2. But you would expect that more if the pullback would be about 50%, and if this would be a proper leg, this is not a proper leg, right? This is 1, 2, 3. The bears sold this bull bar, and the bulls bought this bear bar. The bears sold this bull bar. What do you expect the bulls to do with the 9, right? So they want to buy more below the 8. Bears want to sell at least 9. Why? Because they had like a 1R on their first entry, so they want like 1R on the second time that they can sell as well. So they want to go to 55 and grab all of the bulls. Small range. So what is the range? The range is about 66. So the range is about 13 points. Opening range yesterday was much bigger. Opening range Monday was much bigger. Last couple of days, opening range was like much larger, right? So we're looking, well, it was maybe 15. So you're looking for a breakout of the opening range. Every day has been larger than this. So you're looking for a breakout measured move at least coming from this range. So what you do, you already start plotting those measured move targets so that when we run up there quickly, you don't jump the gun when we're already at the measured move. So 80.25 is a measured move up. And we'll do this correctly. We'll get down. 39.25 is a measured move down. Okay, so if we now get a humongous bear bar that goes all the way to 39.25, you don't sell because we're already at the measured move target. So I put those lines in there so that when something happens now, something rips up and it stops exactly at that line, I don't get tempted to quickly jump the gun on a FOMO trade or anything because we're already there. The larger I draw those lines, the heavier target it is. So these are only targets from the bulls, I think, or these are only targets from blowbacks, which are small targets to me. They don't mean much resistance, so I draw them like small lines. This one is more of a stop, so I draw it medium. This one is a big target, and this one is a big target as well, so I extend them a little bit. So that's how I mentally, because I already forgot what is what exactly, but mentally I know that this is a much stronger resistance point than these two lines. Tricks that I play with myself. Okay, 10, reversed up from below 8, so buyers buying 8 for scalps. Nobody's giving any sign of giving up, right? So bears are trying. The bears might be giving up because they have the gap up, We had a little bit of a lag higher. They had a good run on 4 and 5. But 6 was very disappointing. 7 was an inside bar end of the leg in the trading range. Now 10 is a doji closing above its midpoint. It's a high 2 for the bulls. If you say above 7 was a high 1, and then above 10 is a high 2. We have bulls that want to go back to 64.75 if they bought above 5, or above 64.25. So there's what I'm trying to say. There is a bullish undertone in the price action, right? So traders sense, and this is what we have over algos and computers. Traders are starting to sense bullishness in the price action. Now that feeling can be undone with a huge bear bar immediately, but right now you still feel that there's more up in the move, or that the breakout is going to be to the upside. The only thing I have is that I know all of the gaps to the previous days got closed within the first hour, and there is a gap on the hourly chart to the 39.42. As I mentioned in the beginning, that is what I have in the back of my mind if the bulls are giving up. But I'm still thinking 64, so one tick above 5 minimum. And then if we get above 9, we can get a bull leg up. But I'm at least waiting until 64.75. Do I say that correctly? 64.25. So triggers the high 2 on bar 10. Bar 11 got above bar 10, so it triggered the high 2. And if we go above 9, we eliminate the low 2, right? The low 2 below 9, failed on 10. If you sold below 9, 11 gave you a chance to get back up, break even. And if we now go above 9, the low 2 is eliminated, and the high 2 is starting to work, right? So disappointing bar 11 for high 2 buyers. So the bulls are getting disappointed. They bought bar 2 close. They made one-time risk reward, right? They bought the bar 8 close, and they got stopped out. If they scalped for one-time risk, if they got stopped out, they're going to try again, but it's going to be the last time to buy this one for the close. And that is 65.75 one-time risk, 70 two-time risk. Let me see some questions here. Some people are happy that I'm here. Some people not happy that I'm here. Whatever, guys. I'm happy that I'm here. So when scaling in to fix a losing trade, trying to get out even, what methodology do you use to set a final stop if it doesn't work out? Well, my stop is my stop, so that's determined by the price action. We just broke above the bar 9 high. So the stop is determined by the market, right? So if you're swing, you use a swing stop. If you scalp, you use a scalp stop. But if I sold, like yesterday, I sold one tick below bar 1. I am freaking out when I see bar 5. I don't want to get back to my entry. Right? I just want to get out. So I'm selling more on the close of that 5, and I just want to get out. So that everybody does that. Nobody's thinking, oh, we're just going to get a second step. No, bar 5 is frightening for bears. If we go above the high of the day, that's when I'm totally getting out. But I'm still thinking that with me, there are other bears that are shorted with me, and we all need to get out. The bulls don't mind that the price is going lower because it gives them a chance to buy lower. There's double buying pressure directly at that point, and everybody's buying. So bears are buying back their short, break even, and bulls know that, and they buy at the lowest price that they can buy, knowing that we're going to go high. So that's how I look at that. But yeah, if I'm clearly wrong, in a trading Wednesday, I know where I can buy more and where I can scale in and where I can get out break even. I would, for example, wait for a measured move. So if you're wrong here, so let's say how can you be wrong here? So let's say you sell below 14. Okay, so there's a pullback. The pullback fails, so you sell below 14. You do not reverse. The price doesn't come back to your entry. Well, you can buy more where the bears had their original stop, so you buy more here. And now your average price is here, right? So your average price is now at that, what is it? At 6. Then you get a measured move up. So I get a measured move up here. I can sell more here at the measured move. And now my average price is somewhere between here and here, because I shorted here, I shorted here, I shorted more here. So when it comes back and closes that gap to that high here on 25, that's where I can get out even with time no profit. But I know that. I know how to do that and how to so where the levels are where I want to scale in. I don't scale in blindly. I know where to scale in. If a trend hits me in the face, then of course I quickly get out. I probably would get out. If I shorted here, I would get out here because I want to get long. So I just take then a tiny little bear loss to get a huge bull profit instead of trying to fix my bear position and get out break even. I'd rather make money than to avoid losing money. Okay, so bar 12 is good now. We have a high 2. We break above 9. We broke above 5. And we closed on its high. So I'm looking this tiny little range here, 10 to here, 72. Bears are of course selling because there's a gap. They want to close the gap. Bulls that are in 3 and bought more are now also break even on their first entry. But for the high 2 buyers, 11 was doubtful, but 12 was powerful. So there is a bullish undertone. Bulls now need to get above the double top. That is important for them. L says that when a stop is hit, there's a 50% chance breakout will fail and reverse, and 50% it will succeed. How do you assess whether hitting the stop the breakout will succeed or fail? It's not really the case because it's actually dependent on what the price action is. If you're in a bull trend, 80% of chances to reverse the trend will fail. So actually, that means that 80% of the bull breakouts will be successful or equal. So if I'm in a bull trend, I buy all of the bear stops because I'm thinking the market is going to go higher. So wherever the bears have their stop, the anti-trend traders have their stop, that's where I'll get in. And I have an 80% chance that it will work. In a trading range, 80% of the breakouts fail. So there's actually 80% chance of being successful if you fade the breakout. So I don't think that when a stop is hit, there's a 50% chance that we'll break out or not. It depends on if you're in a trading range, and which side you choose. I traded the DAX this morning. It had a huge bull run. I think it had like 200 points up or 150 points up this morning. I just bought every time it went above a tiny little pullback. So you buy like, I don't know, a couple of contracts. You scalp out a couple of contracts, you keep a couple of contracts in, and then every time you do that, you have more contracts running towards that higher time frame target, and that's how you rack up a good DAX profit. Bears are taking over. Still mostly horizontal, right? We're about to test the open again. See what the magic move is to the 12 low, 54.50. If you're opportunistic, you call this a small pullback bull trend, but it's more of a trading range. But there is a little bit of a trend visible if you say higher low, higher low, higher low. But you don't have a higher high since bar 2. So it's more horizontal than anything else. Buying below the 11 low, below the 12 low, gap close to the 12 low, below the low of the day or not. Measured move the size of about 12, could go lower. First touch of the moving average today. After a gap up, moving average touch, but with so much bear momentum from 13, that is not, the fact that it touches the moving average is not like a, I'm going to buy here. That's not a little bit of head and shoulders if you have imagination, but no, this is just scalping along the sidelines. So you're scalping below 11, you buy below 11, you buy below 1, you take a couple of points, assuming that we're hovering around the open of the day. So when we get below the open of the day, you're looking to buy. When we get above the open of the day and we haven't tested it enough yet, we're going to test it back. So right now we're hovering around the open, but mostly above it, right? So bars 3, 4, 8, 9, and 12 were all completely above the open of the day. So there's still bullish tendency here. There's a gap below 12, but it's the first gap on the way down, so it could remain open for a while. There's also a gap, if we close this bar down, there's a gap then below 13 that we might want to close. But we're still at a small range, so the small range will break out in either direction. And if it's now this range, 39.25, that target. Didn't I have the line already on there? What happened? Oh, I moved it up. So Roger is asking, when you have a chance, do you mind explaining how you find your 2-to-1 and your swing targets? I would if I could, but we're going sideways, so we don't have swing targets. But if you mean how I find where I think bulls will want to, bears and bulls will want to get to, I think if you sell the 13 close as an algo, I put my stop one tick above and I enter at the close, so the close is 58.25. So then if I take my risk there and if I take my entry at the close, this is 1-time risk, right? And this is 2 times risk. So algorithms are taking that as their targets. So right now, computers that sold the 13 close put their stop one tick above will want to get to these 2 levels. And I'm looking to see if they get there. And right now, only the 4 close bears got that. The 12 close bears didn't get it yet. So if you sold as a bear the bar 4 close, you got 1-time risk. You didn't get 2-time risk. Right? If you sold as 13 bear, you're getting scared because you didn't get 1-time risk reward. You want that in your first bar to see that 1-time risk reward. The bulls got it, if they bought the 2 close, they got it on the 3 high. The 8 bull close buyers didn't get it, they got stopped out. And the 11 bull close buyers got it. See? No, they didn't. They got stopped out as well. Interesting. The gap is closed. The gap to the 12 low is open. Bears are hoping that we're going to get that 1-time risk reward, but buyers at the 1 low. So more sideways. As I said, I felt bullishness here, and now with 12 and with 13 and 14, the bullish undertone has been negated, right? It's gone. Now it's really neutral. Because bulls were successful, bears were successful, bulls are failing, bears are failing. So now nobody is like buying above is not profitable anymore. Only scalping right now is profitable. So because the range is so big and you can only trade this with like a scale in, and ranges have been 40 points, it's very difficult to scale in here because you need scaling capacity for when we drop below and come back, or when we go above and come back. So you can't aggressively scale in into this tiny range, because then how are you gonna repair that if we break up? So although it's like 13 points in the current ranges of today, 13 points is still a tight trading range. We used to have days a couple of years ago where the range was 10 points, and then 2 points was a tight trading range. But I think 13 points in the current volatility is a tight trading range. And as Al says, tight trading ranges, stay out and wait. And if anything, get yourself a coffee, which is exactly what I'm going to do now. So give me 2 minutes, getting a nice coffee. Missed the breakout? Did I miss the breakout? Nope. Still sideways, but jumping off from the moving average. 15, can you buy above 15 with someone's bear pressure 13 and 14 in the middle of a range? It's probably not a good buy. It will probably trigger to go to 61.50, but the bulls are taking it quiet today. Sometimes it's good to see how does this look upside down, right? So what do I see if I look at the chart from another perspective? So for that, I have the mirror chart. I can look at it Globex. So the dark area is the Globex, the white area is the RTH. So we basically see the same, right? We came down, so which means we went up, and now we're sort of stalling into a continuation. You expect that in a bull trend, continuation exits on the bull side, but this was strong. It failed here. There's a gap there. I don't see any bullish breakout on the mirror chart, or to say the bears are not taking over, and I don't see any bearish breakout on the mirror chart, so there's no bullishness yet. If we get below this bar, I would expect a massive move. In this case down, so it will live up, and then indeed if we break out that. So mirror chart doesn't give me any new insights in that regard, but sometimes it does. So what are we expecting? If we get a bull breakout, well, that we go into that 78-75 area. So gap below 12 is still open. This close is also still open. The gap is now 60.25 and closed. The pullback from the bears is now 50%. The gap is closed. I think the bulls that bought this close didn't get that profit on 12, so they might want to exit here. So we might want to see 61.50. The bears now hope that we get below 15 so that they can continue the bear move, and that you see 15 and 16 as a pullback. The only thing you hope in situations like this is that the breakout actually gives you a chance to enter, right? Because everyone is now so charged. The bears are charged and the bulls are charged that one of them has to give in. That you just hope that there's going to be a pullback for you to enter, because it might just go in one rip to the measured move, and then you're still on the sidelines, right? But as traders, we are not guaranteed a salary. Sometimes we don't make anything, and we just wait. We get below 15 and then rip down. That is the question for the bears. 49.25. It's not looking that way. So 54.75 is what the bears want to see, so that the bulls think, this bull run is not going to work. I'm going to exit. And if they do, bears would love to enter where bulls exit. But right now, the bears from 13 are getting scared as well. They have not yet gotten to that profit target here, that's this small little line. So they got a huge bear statement, a little bit of follow through, but it closed almost inside the bear 13 wick. So they're like, I want to see bear action now or I'm going to exit. So I know this is not much of saying where to enter and where to exit, but this is the price action that we're sometimes given, right? 13-point range. If you're brave and you have room to scale in, you go for gap closes. So you buy here, you buy more, until the close of that 12 gap, you exit. So you make a couple of points there. It goes above here, you sell, or gap close to there. But you make 2 points, you make 2 points, you make 3 points, you make 4 points. Suddenly it rips up or it rips down. You lose all of your profits. And so that is always the difficulty if you just scalp for small amounts of points. That 1 20-point bar destroys all of your efforts, right? So it's actually better to use this time to see exactly what's happening, what the levels are, what bears are doing, and what bulls are doing. You learn better if you're not in a trade than that you're in a trade, because if you're in a trade, you're psychologically much more closed than when you're not in a trade, right? So when you're not in a trade, you're objective. Every uptick is an uptick, every downtick is a downtick. But if you're in a trade and you're short now, every uptick is a threat, and every downtick is like, yeah, we're making money. So bears taking over. They want to get to 49.25, 42, and they will ultimately want to have their breakout from the whole trading range. See what they can do. So they still didn't get their 1 hour target from 13 close, right? That is there. They missed it by 2 ticks. That can be important information. So if they keep missing that, it's called a 2 or a 1 tick miss. If they miss it by 2 ticks, then they're gonna exit. But they'll try 2 times. So this was attempt 1. This is attempt 2. Plus, we want the breakout of this whole range. Now, it's not breaking out of this range because the low was 52.50, and we're about to close probably within the range or almost, but not like 5 points below the range. So it's not a successful breakout. Bulls are buying the low, as they did buying the low of 1, as they did buying the low now of 14 for gap close. Bears need to show in this bar that they're serious. Okay, so if you see this is the bear leg, that is the bull pullback, then 1 tick below that 15 is where the bulls would put their stop. And then when the pullback fails, bulls get out, bears get in, double selling pressure, 49.25 minimum target, and 42 is of course our target for the gap close on the 60-minute chart, and 39.40 is our complete, well, it's now a little lower. 38.25 is our complete bear target if we get a measured move. But what usually happens is that in the first dying seconds in a trading range breakout, in the first dying seconds, or at least in the first minute, it starts to break, it starts to do that breakout, right? Because everybody's convinced when the bar closed, it's like, yes, this is it. So I'm not convinced yet that we're going to have here the successful breakout. Now it's starting to look better, right? You see that the 1 hour target got reached. That's that longer line. You see that the measured move of the pullback 15 and 16 got reached. That's that smaller line. And that's where bears are taking profits. Could be partial profits, could be full profits, depending on how they manage their risk. Usually that measured move gets tested twice. So if we close above it, we might test it again so that the bears that didn't take profit the first time think, yeah, that should be a good place to take my final profits, and then we move up from there. But we just have to see. If you're a bear selling 13, you took one-time profit here, maybe on half of your position, and you'll take your second half off here. That gives you a 1 to 2 risk reward. So to think about it, you take one-time risk reward 1 hour there, and then you take your second risk reward on breaking and reaching the other side of the trading range, the measured move. That is a 3 to 1 on your trade. So if you take half and you take 3 to 1 on half and you take 1 to 1 on the other half, you have a 2 to 1 trade overall, right? But as soon as you hit the 1 to 1, you're risk free because you can move your stop to break even. I can explain that in more detail, but let's right now just focus on what's happening here. So measured move range, reach for the bears. And now gap open to the 16 low. It's the only gap that's open because the 12 got closed. So if the bulls come, they want to get close to that 16 low. Right now, we have our first close below the low of the day, maybe. And so the 42 is what we're trying to get to. So it's sold below 15 when 17 went below 15. The 2 partial profits there, and I'm now still short to see if I get a breakout. You can always revert a scalp into a swing, and you can never revert a swing into a scalp, right? So if I'm scalping large set of contracts, I will try to convert as much of my scalp size into a swing, right? That's what we were trying to do here. We were trying to front run a potential breakout. Now, if that fails, we exit immediately for scalp. But if it works, then we convert our scalp into a swing. Now, you can't convert a swing into a scalp because if you take a swing, you need to take a big profit to offset the low probability and the large stop. So you can't take a large stop and a small profit, right? If you take a large stop, which is a swing stop, you need an even larger profit. But if you take a scalp with originally a scalp stop and it breaks out, you can revert the scalp into a swing. That's fine. I like to trade in pairs of 6s. So 6 contracts, 12, 18, 24, whatever it is. 6 gives me the ability to divide between 1 and 5, 2 and 4, 3 and 3, 4 and 2. It's probably an autistic tick of me, but it just helps me to say, do I want to take half off, or do I want to take a third off, or do I want to take 2/3 off? Okay, so 18 closed below the range after 15 went below the range, but we don't have conviction. It is a 2-legged move down. You can't draw conclusions from the breakout yet. It could even just be an extension now of the range and just go sideways in a bigger range now. What you're really looking, what we were looking for and hoping to get was like a big bear bar, right? So convincing breakout. If you see a breakout and you're like, oh, that breaks out, that's a successful breakout. Is this a successful breakout? Probably not. Like if anything, this is a lag, pullback lag. So you might have lag 1, 2, lag 1, 2, and this might be it. It's bar 18. So the significance of it being the low or the high of the day. If it now breaks, like we need, I said bar 18 needs to be the deciding factor, and it went below it. Bears have their success, but I don't think they're partying and saying like, yeah, we have a breakout. If that would be a successful breakout, bar 19 would have already gone below 18. Like if everybody sees that 18 is a successful breakout, everybody's selling because everybody knows where we're going, right? The only thing is that trading is that channel that I mentioned is now in reach. So we went above it. and we're starting to drift down. So I'm thinking that we're going to go a little bit more down to touch that channel line. So that got reached to the ticker. So the measured move from, I'll show you again how I measured that. So the measured move of that pullback that got reached 49.50, and we got to 48.75. So got the measured move of that little range there. We also got a measured move of this little bull range here. So this range here got to the tick as well. So this little bull move. So in a bear trend, or in a little bear trend, the bears break out the size of the pullbacks. We saw a really nice trend today on the DAX. Let me see if I can get it. I normally have my DAX chart here. 60-minute. I was going to do all funky things for you. Quickly pull up that chart. We had a real good move today on the DAX. Like this is the open, and it went into a bull trend. So first breakout of the trading range with follow through, and then you see a pullback. I will buy above the pullback, and you get at least a measured move the size of this. We'll buy more here on the pullback here. Here you have a pullback, so I buy more above there. Here you have a pullback, and I buy more when we hit that pullback. It's a two-legged move, so I will buy above here. And that's sort of how I trade in trends. So this morning was quite successful. I broke this whole thing up. And then of course we get this in the E-mini. Scalping for points. I think breakout now has failed. So bar 19 is a bull bar. It's a high 2, high 1, high 2. A little bit too much bearish price action to my taste to buy above 19. But I think bears are about to start freaking out because they know that the 13 bears have exited. They know that we have the measured move here, so they've exited. It's bar 18, usually around the low of the day. I don't think that they're super happy and seeing a measured move down to 39, 38 area. But if we go below 19, they'll certainly try to sell again. Because it's the same thing as I mentioned, right? So bear leg, pullback ends, bears take over. Now bear leg, pullback, the pullback ends, PA would go below 19, then the pullback ends, and we're gonna go for a third leg then. So if you scalp this with 6 contracts, and you think that we're gonna go to 42, you take like 4 off at the measured move, and you let the other 2 run until we are much further down. But this is looking to fail for the bears. Because if you think about it, who's still bearish now? Who's still in there? Well, the 13 bears, the ones that sold this big one, they are out. The ones that are looking at that measured move, they're out. The ones that are looking at this measured move, they're out. So the bears are not with much anymore, with many anymore. So the bulls get a high 2, but it's risky, right? Because this is an exit signal for bears, it doesn't mean it's an entry signal for bulls. We're below the moving average, we're right at the moving average. So the only thing you have is a high 2 and the fact that below 16 there's a gap. So gap close to the 16 low is good for scalpers. And you sort of have a wedge on the whole thing. So if you take this, I would draw it like this and say it's a wedge. So you want to go to above 17, and you want to set a measured move to the size of that range. If you're aggressive, and then ultimately get to the 1750. I'm looking at this trend line, and I'm thinking we're going to hit that trend line. So I'm not sure, but I don't take the long above 19. If I take the long above 19, I would scalp out Probably one-time risk reward is about at the range of that 16 low. So I'm looking to see that 16 low being closed. So it's around that area. This is one-time risk. This is two-time risk for scalpers. Swingers put their stop below 18. They buy one tick above. So they want to get to the high of the day. So the hourly bar on the Globex just closed. So we can take a look at what it looks like. So we got our little wedge formation here, but we're still in this bull trend. So we can draw it here. We can draw it here. A little bit of a bull trend on the 60-minute chart, but a big bear bar. Did it go below the other big bear bar, 48.75? No, it's a double bottom with that bull bar. The gap is closed here. So if we go above it, we could actually explode to the upside and go to 82.25. And the hourly bears will want to get to 39.35, 39.19, but not convinced. So it's not an easy day. It's slow and it's scalpers market. It's the days that are, if you're happy that you can rack up 10 points or something, it's a good day. Right? You can see our 15-minute chart completely horizontal, so we broke below it, but we're about to reverse up. If we go below 19, bears will want to try again. I think the bulls above 19 are disappointed with 20. The bulls that bought the close of 19 are disappointed with 20 as well. But the bears are very disappointed because they were thinking that they had a breakout. And 19 makes them sad and 20 makes them crying. So bears could be exiting, and that is the reason why bulls are about to enter. So that tiny little line there, that is the 1 hour target for 19 by the close bulls. We missed it by a tick. Like we hit it, but we need to go 1 tick over for every bull to get filled. So we missed it by a tick. That usually means that bulls will try again. They'll try again twice to get filled, everybody, and then they'll exit. So they have the gap close below 16, that's 57.50, and they have the fact that we already touched their price. So they'll buy more, or they'll keep in their position until they fail for the second time. Can 19 become the trade of the day? It is a possibility. Nice little wedge pullback, 6, 14, 18. Bull bar breaking out above 18, fill breakout below the range of the day. Let me take these lines away. Fill breakout here can lead to a successful breakout on the other side. So 19 has a good chance of being the trade of the day, but it looks very scary. So bulls are making money buying 19. The gap is closed or not. 57.50. 57.25, the gap is almost closed. A little bit of profit taking from the 19 by the close bulls. But we're so close to the gap, we'll be magnetized into it. It's a magnet, right? So it's pulling the bulls up. The bulls are gaining momentum because more and more bears are exiting. Like beginners sell 18 because they think it's a breakout and we're gonna get out, and then they see 19 and they're like, oh, that's a pullback, and then they see 20, they're like, oh, that's still a small bar, and now they see 21 and they're like, oh, I'm on the wrong side of the market. So if you see the situation where you know it's gonna fail, you know that bears are not happy with this, they're not happy with this, but they're freaking out with 21, right? That's how 21 can grow real big, because you have double buying pressure. You have bulls that are out and they want to get in, And you have bears that are in and they want to get out. And it grows every second they look at that bar, the bar is growing on them. And that's how a bar like this could suddenly become 10 points tall. And it's already 6. So bears that are short will want to repair this. Right? So they are, if you sold the 18 close, for example, you sell this bar, you know that the gap might close, so you want to sell at the 59.50 level and then get out break even if the gap closed. But I would just get out and turn bullish if I were a trader instead of just a bull or a bear. That's what I mean. So if you're short, I'm not looking to repair this. I'm just flipping. That's what I mean. I said it weird, but you see that this is the 2R target. So the 19 by the close bulls are at the 2 times risk reward target. They didn't get filled yet, so they ticked it, 16.25. We're also now above this stop. So bears have their stop above here. More bulls will buy here, and the measured move target is to 70.25 if we break out now. So the 2 time risk reward bulls are rewarded for buying the 19. We're now breaking out to the other side, 70.25, 39.80 as a good chance. I think we finally found our breakout. Because you see how convincing this is becoming, right? Above, what is the number? Above 17? So if you are a bear and you didn't know that all of the bears were taking their profit, you had your stop probably above 17 or above 16, you're now stopped out. So that's why you need to know where other bears are taking their profits so that you join them. Now the race is on for the high of 17. So 59.50 was the high of 17. We want to close above it so that we can get a measured move up to 70. And in the process, maybe even get a measured move the whole range. But it's still a trading range. We still have now that gap. This might be one of those gaps that doesn't get filled because it's a runaway gap or a breakout gap. That might stay open, but then this gap will probably get closed and other gaps on the way up. Can this still become a bear trend? I don't think so, because they tried here, it failed. They wanted to go down directly. They tried again and it failed again, and they tried again and it failed again. So we sort of now have a wedge here that I pointed out, break out below the wedge and reversal back up. If it's a little bit dependent on how 22 is going to close, but if this closes like the bull bar that it's now, then it's much more likely that we're going to go up to the upside, and ultimately to 39.97. Did we not test the open? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 times, right? So yesterday it was 9 times. Today it's 10 times. And after that, we didn't anymore. So it could be that we're racing up now and not seeing the open anymore. But until then, hovering around the open, looking for shorts above, looking for longs below, is what the point scalpers have done. So yesterday we tested the open 9 times before we took a move. We've now tested it 10 times. It might be that the move is now underway. This 2021 was very strong, right? Completely reversed now, 17 and 18. Now we know that the bar 19 buyers, the buy the close buyers, are out. So we don't have those bulls in there anymore because they took their 2 times risk reward profit, right? Exactly there. We only know that the bulls that are buying above 17 are still with us because they're hoping for the measured move. And we're still with the swing bulls that bought above 19, that bought above 20, or that bought above 21. So we closed above 17. We're now testing back 17, closing the gap above 21, gap close. I'm thinking this gap is going to stay open. Probably get a pullback now. Might be a 50% pullback, or that could close the gap, but I think this is the attempt now by the bulls to take over and break out. What we want is now, of course, a bull bar going above 22 and confirming a breakout above this range, right? So we had a close above this range, that's good, but we want continuation now. We want with every extra bar that the bears get more pain and more pain. And the more pain the bears are going to get, the quicker we can move up. On the hourly chart, we want to get above the hourly bar, so 65, 75, and then eventually move up that range. So that the bears that sold the 60-minute chart here, they're going to get stopped out, right? If you see this on the 50-minute chart as a leg 1, leg 2, we are above their stop on 60, 75. So we want a measured move based on that side. So every new high that we make, we're forcing more bears out if this becomes a swing. Bears are scalping, of course, so they're trying to fix their short. So if you sold 18, then you might want to sell more at the high of 17 and then get out, break even if you can, but I would just take my loss and look the other way. Let's see if there's a pullback from this bull trend. So I think we now need to adjust my measured move targets on the range. Yes, so this one goes to 84.75, which means that this one is invalid and goes to 30.75. Okay, so breakouts from the range is to 30.75 and is to, what was it, 84 something. Someone's asking scaling bears who sold the close with bar 18, so that's this one. They would be out at break even around 3.955, correct? If they can't get that, they'd be trapped in and forced to sell out of longs, to buy out of shorts out. Is that correct? It depends on how you manage, right? If you know the day is a trading range day, I think a lot of traders on a trading range day, they take a tiny profit or they take a break even. So if you're stuck here and you sell more at that high, you can be out at the gap close, 55. You can sell more if you go up a measured move and then sell more here. And now your average price is sort of here. So if it then comes back to test that high, that's where you then get out. I think it's easier if the market turns bullish than just to accept it. Like you got your 18, you got 19. If it goes above 19, breakout fails, get out. Like don't sell the 18 close in general. Right? Why are you selling the bear close? Why are you selling so low in the trading range? If you want the breakout, sell below a pullback of the breakout. So instead of selling 18, wait 19 and 20, and if it goes below 19, sell there. Right? So don't sell the close of 18, sell a pullback. And if it goes lower and then you get a pullback, then just sell lower. If it goes directly in one bear bar to your measured move target, oh, too bad, you missed it. But you can't be like selling here, 18. It's just, it's very dangerous. That's exactly what you don't want to do. So what does 23 say? So 22 went above this tiny little range, right? So if you see this U on some higher time frame, this is a reversal bar. That means 1 hour on the reversal bar or a measured move of the range. So that's 70, 50, if I have the numbers correct. 23 dipped, tested the high of 17 and closed as a doji bar. So we don't have to it's again like 18, 19. We have a breakout, close a little bit above it. 23 doesn't give us reasons to exit because it's not a bear bar, so we don't want to get out yet. But 24 needs to show us that the breakout succeeds. So 24 could actually be the deciding bar going up. But if 24 is bearish, then bulls are exiting. Because 23 was indecisive. If you're a bull and you bought above 17 or something, you can also exit now and then enter again if we go above 23 or if we go above 22. That's a high one. I think everybody that's bullish wants to go above 13, right? That's the big bear bar. But the thing is that the bears are not stopped out if you go above 13 because they already had their profit. So there are no stops here anymore. These bears have exited. You're just using that for ranges. That's what you're using it for. So the most appealing range right now is this range. Like this is a reversal bar on the higher time frame. It's a range that is now part of a breakout, 70.50. We also have that. I still have my target of 72.50 in general. But 24 needs to give us that answer. Are the bulls serious enough to break out? And again, good breakouts, they go in like the first minute. Like if everybody's convinced that a breakout is happening, everybody knows what to do. If a bull breakout is happening, bears know that they have to exit, rather this second than the next because we're moving up and bulls need to buy as quickly as possible. So that's how you get those big bull breakout bars. Everybody knows when the 5-minute bar closes what to do. And right now that's not happening, right? We are not instantaneously ripping up or down. 23 didn't make us sad and it didn't make us happy as bulls. So 24 needs to do it, otherwise bulls are giving up on the idea of a breakout and a big move up. The worst thing that can happen is that we're staying in this 13 range all day. Inside bar 24. So inside bars are usually the end of a leg in a trading range with sellers above. There's no breakout, so if I was long, I'd be very careful. I'm still a little long, but not excessive long, so I took some profits. I'm not happy with 24. We need to go at least above 22 highs with 62.25. I want to see that. I want to see 62.50. We got 3 closes above that this level range, so that makes me happy. But I said 24 needs to prove it, and it did with a small bull bar, with an inside bar. So got the tiniest gift that I could get. 25 then needs to prove it. I want this breakout before my session ends. Just for the fun. So what happens on 25? Another hesitation, but it's by the close. Every bull bar, bulls are buying. 25 was a doji, so I don't think that's by the close on 25. But 21 was by the close, 22 was by the close, 24 is by the close. 25 is again disappointing. But what's more disappointing is for the bears that we're not getting any bear movement. So at this point, I'm hopeful for the bulls and I'm fearful for the bears. So my feeling is still higher. But you can see what's happening here, right? So it's by the close. We're trying to go higher, but we're not getting the explosive give of bears bar like bull rip higher to 39.84. We sort of have three moves now. So we have 1920 is one, 2122 is one, and 24 might be the final leg because it's an inside bar. So below 24 is a time to exit. The bears might find out to close the gap above 21. This was a brave attempt for the bulls, but it's just not happening for them. Right? So more sideways. I could be the first trading room commentator that falls asleep during live commentary. I don't think that ever happened. But if the price action remains to do this, well, my coffee kicks in. So. The race is clear, right? The race is on the higher level 3997 for the 60-minute bulls, and the 3942, the gap on the 60-minute chart. That gap on the 60-minute chart could of course become a measuring gap, but we were already there. So we have that 3970, we have that 3997 target, and we have that 3942 target here, that gap. We're coursing higher in sort of a channel, but this was quite the pullback. So together with this bearish action, we're still trying to get to this 70 point, but my heavens, bulls, can you do it a little bit quicker? I think 25 is another example where you want to maybe exit as a bull, but not enter as a bear, right? So a small bearish signal is enough to exit along, but a small bear signal in a buy the close bull trend is not a good, a good reason to enter short. So it's fine if you exit at your longs below 24, between 25, because you're afraid that we're going to come down and close the gap above 20. But I wouldn't short it based on the fact that it is a low 2, like a low 1 here, 23, low 1, low 2, 25. I don't think that's good because this is a buy the close bull trend and we're trying to break out. So you can exit longs, but enter shorts below that doji is just very dangerous. That's what I mean. Like a bear signal can prompt you to exit longs, but in this case, it doesn't prompt me to enter shorts. So if 26 becomes a nice little pullback bar, what it's now, and it stays with the bear body, you can buy above it because that's when bears give up a second chance, and then we can go higher. So if you exited your longs below 24, below 25, and we go, and this stays the bar that it is now, we go above it, you can re-enter your position. Maybe with a different size because you're now entering higher, but it is a good, that is a good long. Especially above 25, because if you're a bear, you sold below 25, you see, you get hopeful here, and then we go above it, you have your stop there, then double buying pressure there. So still looking good for the bulls. You can argue that this is a retest of that range. It's a failed breakout below 23. Could be a mini trading range. So this one, the trading range between these levels could go up to 68.50. It can also, of course, go for the rest of the day in this range, but it still looks like we're going higher, right? Imagine being a bear. You see all of this price action, buy the close, buy the close, buy the close. Everybody who bought a close here makes money if they buy the close and still in lower. So you buy the close 24, even if it goes down, it comes back to your entry price 24. That's why we pull it back now, because these buy the close bulls 24 bought, and they bought maybe more at 26, or they didn't, and they saw 26. They want to exit. That's when you can get out. If we now go above 25, that is another good high one. Getting awfully close to the hourly high. That hourly high was 65.75, so that's this one. That's good, right? Because then we're stopping out the bears on the hourly chart as well. No, I said this inside bar in the trading range, and inside bar is sort of the end of the leg temporarily. You get a leg, you get an inside bar, and it stalls as soon as you get an inside bar. I think we had a couple of examples. We have an example here as well. So you get like a leg down, you have an inside bar that closes below. I see it as a sort of exclamation mark upside down. So you have that inside bar. Yeah, that's where the leg stops. So once we get below that, that's when buyers kick in. I think you had it here. A little bit of an inside bar there, so not far above is the top are where the sellers are. Inside bar here, so close up the leg. Here you have the same, so this is a typical one. Trading range leg down, 18 is an inside bar closing on its low. That's where the leg stops. That's where you want to get out of your shorts if you're in the trading range, because you need to take quick profits. Well, actually, that is a funny question, but it's also a serious note to that. Why are you drinking coffee and not wine at 6 p.m.? Well, the answer is, of course, like I don't do alcohol and trading at the same time. But the real answer is probably I'm very, very meticulous about how I trade, how I divide my day, how I spend my energy, and my rituals before the day begins. So other people call it trading in the zone. Other people call it psychological mindset. Other people call it meditation before you trade. But what works for me is doing exactly the same things and taking even the same substances at the same times. So I know when, now I don't drink coffee hours and hours before, but I take one about 15 to 20 minutes before the open. I know exactly what the humidity needs to be in my office. I know exactly what the temperature needs to be. I don't wear anything that is bothering me during trading or something. So I do everything I can and that I know for myself that gives me the ultimate concentration. That's also why I never trade after sort of 12 Eastern, because that's 6 p.m. for me. So I'm up already a long time and I'm highly focused for 2.5 hours. And then it's sort of where my concentration level ends. So I have very, very strict rules for myself on discipline and when to trade and when not to trade. And if I breach any of those rules, I don't trade. So if I'm late for work, I don't get to work, right? So I'm firing myself for the day. So if I come 20 minutes past the open, I don't trade. If I tried to trade on holiday 2 weeks ago, internet failed on me and I lost a lot of money. So as a rule, like I don't trade if I don't trust the Wi-Fi and all of that. I have backups of backups. I have double internet lines. I have a 4G backup line. I always have a stop so that nothing can happen when my connection breaks or anything. So I'm very, very meticulous and even very strict to myself on how I approach the day and what I do. So I actually measure myself or look at myself to see if I'm able today to trade full size. Excuse me. If I'm able to trade full size, or that I would go a little lower on myself. So days like this where I'm trading, talking, looking, like trying to think, I don't trade my full size when I'm in the trading. So all of those things, I have rules and they're non-negotiable with myself. I don't give myself slack. I'm very, very harsh on myself. Because I know it works and I know that if I deviate from them, I lose money. So, and it's not bad to have a 2.5 hour work day per day. Like I can do 2.5 hours without Facebook and Instas and YouTubes, all of those things. So that's your answer. 27 is finally something good for the bulls. I think we are going to go above 13. But where is the dedication. Look at that 15-minute chart on the left. Like, what a pathetic 15-minute bar. Come on, bulls. What we do have here is now a breakout above that bar, though. So, like, I'm still hopeful. 72.50. I'm still hopeful, but I'm just frustrated with the pace, I guess. Because I'm presenting and I want to present some fun action. Instead, we're grinding higher. So I hope you're long. But we're getting to the top of the range. Let's see if we can get a major move here. Oh. $68.50 to that one, and $65.25. Okay, so the magnetic effect is, of course, now to the high of 13, right? So $65.50. Now, the magnetic effect, as Al describes it, is that as you come closer to something and as it becomes very probable that we're going to hit something, so the high of 13, then why would a bear sell here if he knows that we're going to go here? Why would a bull exit here if he knows that we're going to get there? So the magnetic effect means if we're very close to a target, we can drop very quickly or rise very quickly to that target because the magnetic effect, we're getting pulled to that point. So in a bar like this where we're 2 points away from the 13, if the magnetic effect does its work, you can get very quickly to that target. Right? That's why you look at the screen like, whoa, 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 what's happening? Well, that's the magnetic effect. If you think that, that's the magnetic effect. Like, how can it suddenly go so quick? Close above 25, close above 26. So bulls are forcing out the bears that sold there, right? Yeah, that's a good comment. It's a vacuum. It's the same. So there's a lack of sellers here if you know that we're going there, right? Closing. So here, a couple of points above here to close the gap to 21. A couple of points here to sell to close the gap to 24. 28, you can sell to close the gap to, 26? So 6150, 6150. So gaps are closing. That is the typical behavior in a small pullback bull trend. So bears scalp to close gaps. Bulls don't buy too high because it's a small pullback bull trend. They'll buy high and they'll buy lower, and then run the trend that way. So where you had that yesterday, they buy touching of the moving averages. They buy bear bars. They buy breakouts here of bear pullbacks. But if you do that, you see that that's where the run actually stops. So every time you buy above a pullback, with a small pullback bull trend, you're already buying too high. So it's difficult to trade if you don't have a specific target, right? If you're here and you don't see that we're going to the high of the day, it's difficult to trade. But what you don't want to do, or what you want to learn, is to not short, right? You don't short this. So if it looks like this, you should not think about shorting. We're trending higher. Even if it looks weak, this is not bearish. Because you have those targets there, right? So don't get into a temptation to sell. I see too many people calling tops in bull trends and calling bottoms in bear trends. Like, for now, just until you get hit with a stick in the head, go long. Buy the close, buy the close, buy the close. And especially above 26 or 27. So where bears have their stop here or bears have their stop here, that's where you want to buy. Like, I will mark these green tomorrow and this one. It's a high one. So now we're going above 65.50, hopefully. So Then we have a nice U here, and we have a nice U here. Every time you see a U on a higher time frame, that U is a reversal bar, right? Right. So this U shape, if I make it compactor, so if I raise the time frame, it's going to be a big reversal bar. So that reversal bar will want to have a 1R, so it's a measured move up. A 1R target and a measured move are the same thing on different time frames. So we're getting close to that hourly high. So if you're a bear on the 60-minute chart, you sold this bear bar, right? And now you know that you're probably going to be stopped out. So that's why on this chart it's likely that we're going above 12 and 13, and then a new high of the day, and then are we going to drift back, or have we tested the open with 10 times enough today? Yesterday 9 times, today 10 times, and is the small pullback bull trend starting after that, like yesterday? After that, like yesterday. So this is the only gap that's open. These gaps are closed, but there's no reason to short for gap closes. And the first target was, what did we say? 70.25. Bears fighting for a double top. Bulls fighting for a breakout. And you see that there's no bear energy in this whole leg. There's no super volatility or bull energy in this leg, but I mean, we've gone up 15 points. So bulls own the market at this point, but we're at the double top. First reversal will definitely fail. We got like buy the close, buy the close, buy the close, one pullback here, buy the close, buy the close, second pullback here. So low one, low two, low three. Sort of 3 legs though. So if you have a low 3, it's 3 legs up. 1, 2, 3. But this reversal fails. We're very close to that, to those highs. If you're in it since 19 or 20, then you take at least partial profits around this area because chances are of a double top. But I don't see a short. So I see a spike and channels. And yes, I see a double top, but if anything, I would want to have a double top. So you go down a little, you come up, you come back up. So you break the trend line, you come back up, and you make a higher low major trend reversal or a lower low major trend reversal. So the hourly bar on Globex is about to close. So it's a big bull bar. It's got a tail above, but it usually means that it wants to go above the big bull bar to see what's there. And if it goes above that bull bar, it also goes above that bear bar. So interesting to see what happens once that bar closes. Sometimes you can get an immediate reaction when the hour closes, but I don't expect that today. We're trying to set up a double top short that I would not take. It's a spike in channel, so how long was the spike? That was till 70.25. So the 70.25 keeps coming up in a lot of different targets. If I see 16-minute targets to the same number, 15-minute targets to the same number, measured moves to the same number, 1 or 2 are targets to the same number. The more I see targets around that number, the more I'm getting convinced and hopeful that we're going to go there. And I sort of have a confidence in the way that I see measured moves after so many years. I sort of know the percentage on how many times they will get hit. So it strengthens my belief. I'm not positively biased or something on that. Like, I'm not trying to get confirmation bias on my targets, but I'm just measuring different things. And if I measure different things and they go towards the same region or target, I'm like, well, if you're by the close bull, you want to go there. If you're measured move bull, you want to go there. If you are by the close or on the 60-minute chart, you want to go there. And if I then see that those types of targets are at the same place, I'm getting more and more conviction. So right now, double top, but a bear inside bar 30. After by the close, small pullback bull trend. Not a good short. It's okay to exit loans, right? If you have an outstanding profit here, you're at the double top, you're almost at the high of the day. You get a double top bear bar, so you might want to exit below 30 or at the closing price of 29, and then see if you can enter again if we break out. That's all good. It's sort of a wedge, right? But a wedge in a bull trend is meant to break bullish. So it's not a reversal pattern. It's meant, you can use it as a measuring tool to see where the bull trend is going to head to. So wedges are not always reversals. In strong trends, they are continuation patterns because most wedges fail in a trend. So if I see this more as a wedge or now as a trading range, we break out from this. I'm taking the size of the wedge and then predict to 70 to 75. So 30 was not a good sell for the bears, and the bulls want to emphasize that by going above its high. We also want to go above the high of the hourly. So we just closed that hourly. I'm going to go above it, right? So could be a buy the close bull bar. 65.50 was that high. Didn't force out the bears from 30 if they were there, but it made them scared. So stop for them. If you sold the bears that sold the close, if they have their stop above it, they got a double top, a micro double top, like 30, 31. So they're feeling the heat. 31 didn't go below 30, so there's no stop bears that entered. So they're all by themselves, not a lot of bears there. Makes me hopeful and positive that we're going higher or sideways. But I want to see what happens if we take out that stop on that line that I have there. It's clear to me that we're taking our time because we want to see the inflation numbers tomorrow. So an hour before market open, 2:30 Europe, what is that, 8:30 Eastern, we'll have CPI release. That is the one that can easily move 100 points in 5 minutes, right? So I don't think traders will want to have a position or a big swing position before that news. When Rose opens tomorrow, that news will already be out, so we'll already have that action. Today, like yesterday, is just yesterday had a bigger range, but today is really sideways into that upper leg of Monday, and chances are now that even if we break out, we're not going for a measured move. So we could actually just stall here and go back because the bulls are not strong enough to strongly break out, right? So if there is a big bull bar, it might not even break out for a measured move. It might just stay in this range the whole day. But we're going to see what happens now that we are about to break out. With the fuel here, like little fuel to the move, it would be extreme if we now suddenly get like big steps to break out. I rather think that we might drift above it and then come back and then just go sideways. That whole bull trend before the open, right? This whole bull trend has basically died as soon as the market opened. So we went up prior to market open. We had that measured move, or we had that attempt to break out of the channel and get a measured move. We failed. We actually went back to test that trend channel line. I didn't see that because I look at RTH, but we went back, tested that trend channel line, and now we're trying again. And what is now an even broader bull channel to get higher. But that measured move above the channel failed on the Globex. So we could still go higher, but it's going very slow. I just want to have that breakout like as the last thing, at least show what happens there. But we're seeing sellers there, we're seeing profit takers here. This doesn't seem like a bear move, it seems like profit taking, same as this one. This is a profit taking bar and not so much of a bear initiation bar. Bears are just scalping for gap closes, like higher and higher gap close, higher and higher gap close. Bear initiation bar. Bears are just scalping for gap closes, like higher and higher gap close, higher and higher gap close. And it's a slow, small pullback bull trend. I guess there's a new definition. Oh, L will be on tomorrow. He gets the action. That's good. So a little summary then. Big gap up, pull back down, bear bar. Traders were hoping above bar 1 that we would go higher quickly. That failed on bar 4, so bulls got out either with a profit or with break even. Bears either sold below 4, most or below 3. Tried to get a measured move, failed on 5, failed on 6, failed on 7, so they bought back their shorts. Then it suddenly, so when you're about here, so on bar 7, you know it's going to be like a trading range open, right? So then you revert to buy low, sell high. You scalp for gap closes, you buy below closes, or you look to see where the stops are for the bulls. So the best trade for the bears was below here to get a measured move to 18. Best trade for the bulls was, the other trade for the bears was probably when 17 went below 15 to get a measured move that range. And then here, as soon as you saw the bear stop taken out, either by here 1920 or by above 21 as it ripped up and then looking for a measured move. Right? So we're now attempting to get the breakout above 13. I would use 13 as the move. So we're getting the first one is 70.25. That is this measured move. That's now pretty much a given that we're going to get there. The second is to here 82.25. So that is the second range that I would take as potential measured move. The other target that I had was this one. So this is the target from Monday. This is the target from the range 70.25. And that is the target for the measured move of the whole range from here to here. That's 82.25. Right? It also tries to break out now from a channel. So if we draw that channel here and here, measured move up the size of the channel is towards around 70.50. So why is this bar big? Because still some bears there that had their stop there in the 4. Breakout traders that are entering on stop orders, they know that this is a range and that we're gonna extend the range. So they might have a buy stop order here, they might have a buy stop order at the high of the day. We now know that 90% chance that this is the low of the day. So the gap close to 42 is not coming today. That might come on the news. And we now try to close above it. Above 13 a couple of times so that we can get that measured move. So this tiny little 19 bar was actually the trade of the day. Difficult to take, as I said. I wouldn't take it because there's just too many bear action and you might get another leg to close the gap. But once you see 21, once it goes above 17, you know that the direction is always a long. You can buy here, and if it goes down, you can buy more. You can buy here and then buy more 24 above 26, 27, or 27 as it goes above 26 and 25. You know that we're going to break out above that bar and above that bar, so you can take out partial profits along the way, and then now sit to see if we're going to hit these targets, right? So we're now going to pull back. I wouldn't be too keen still to look for shorts. I would see where I can enter long, right? So I think that is the strategy for the remainder of the day. I don't see a new bear swing coming. I do see gap closes every now and then, so we might come back to like that ledge top, but definitely always in long. Targets above, probably going to extend the range with those targets above. I would stay for now at least on the long side and see if we can meet those targets. Making sure that you put your stop and your trade size in the right way, and maybe making sure that you can always scale in lower, right? So this one closed firmly above 13 high and above the 4 high, right? That is good news. Might now hit the 70.25. 70.25 was a lot of targets. We're also going above the hourly, so that might set a measured move around 50.65, so about to 80. And the market could become very one-sided now, because bears know that they've lost the battle. Everybody is on the buying side, so it could now become very one-sided and basically become a bull trend, unless the bears keep hunting for their gap closes, right? You're at the top of a trading range, but you have a breakout. So like bar 18, I would not buy 33 because you're at the top of the trading range. But if you are long, you're hopeful that we're going to get now 70.25, right? But if we're at 68.25, you have 2 points reward. Like, where's your stop? Maybe 27.31. So your risk reward is all upside down. So if you're out of a position right now, you don't want to be short. You don't want to be entering here. So tough day. I hope you got something out of it. I got something out of it. So although it's not a windfall profit today, but it's still a couple of points here and there. Love to catch up with you next time. Send me any questions. Don't forget to tag my name. I'm not following the Discord, but I get like notifications when somebody tags my name. So do that, and I'll be happy to go over any questions or comments. Yeah, sorry that we went so much sideways, but you can't control the market. You get what you get, and hopefully next time some more action. So thank you very much, everyone. I hope you get a great evening and lots of success. Thank you.